You guys ever wonder who you should follow to invest your hard-earned money? Man, here's a little hint. It is not the headline people. It is not the gurus out there. It is not the people plastered all over CNBC. In fact, watch this clip right here.
We believe that our portfolios will more than triple over the next 5 years. So that's more than a 25% compound annual rate of return over the next 5 years. Actually, it's approaching 30 after today.
Consider the source. It's our research. Our research, I think, is the best in the business, but we're expecting a 50% compound annual rate of return.
50% returns per year. First of all, anybody that is, quote unquote, a professional money manager that quotes you a rate of return of what they are going to deliver to you in the future either doesn't understand what their job is, how the market works, or is just simply a charlatan. Because nobody knows what the future holds. That is absolutely just egregious to do something like that. And so many people put their money in places where the figurehead is someone that's famous, somebody that's on CNBC, somebody that they think is going to create success for them. How did those 50% per year rates of return work out for Cathie and ARK? Well, in the last 5 years, that ETF has obtained a loss of 2.15% compounded every year. Over the last 5 years, basically it's lost 2% a year after year. This is the place that people put their money because they thought they were going to make 50% returns. And they're losing money right now. And this is the absolute unacceptable figure. This figure right here, 41% standard deviation. Why don't you just go to Vegas and put your money on red or black? That is one of the worst standard deviations. That's one of the worst risk-reward ratios I have ever seen in my entire life spread out over a diversified portfolio. Is there a better way? Yeah, I think there is. Let me show you what I think is a better way to go. Our asymmetric trade management passive asset allocation portfolio model. It's a mouthful, but it basically is focusing on two things: beating the market year in and year out, doing it at less risk, less standard deviation, not more. Why on earth would you invest in something that has 4 times the risk of the stock market and 3 times the worst rate of return? It just doesn't make sense, and yet she's got billions of dollars in there. What is our asymmetric system? We call it ATM for short. Well, basically, we look to beat the S&P 500 and do it at less risk. Those are the two mandates that we look for. It is investing, not trading. It's passive in nature, works for IRAs as well as non-IRAs. It takes a maximum of 5 minutes a day. We make 1 to 10 portfolio adjustments each morning. Then you're done. No trading. Close the laptop, walk away. Again, we have that dual fold mandate of number 1, beat the market. Number 2, do it at less risk. All of our results are tracked and based off of our net liquidation changes. So you have a daily transparency over the last 3 years of every single day how this program has performed. Has a hedge fund aspect to it. We hold short and long positions. That means we make money when markets go down versus the market just losing. We have non-equity correlation. That means that we use uncorrelated strategies with uncorrelated markets. We trade in all kinds of things, oil, natural gas, you name it, commodities, bonds. There's all kinds of things that we trade in that don't correlate with equities. That smooths out the standard deviation, allows us to take less volatility, less risk. Four main components. We do short in the portfolio. We do go long. We cash flow both of those with covered calls or covered puts. We enter a lot of our positions with credit strangles, which allows us to sort of brace against a 1 to 2% weekly volatility in the stock market, not have it really affect us. And we use anchor positions. Some people refer to those as poor man's covered call, leap covered rights. We use those on both sides, but we do have that non-equity correlation. We trade in, this is just a sample list. We trade in all kinds of non-equity correlated underlines. That's how we strive to work towards beating the S&P, but doing it at less IV, less volatility, less standard deviation, less risk, okay? Our performance updates, how have we been doing with this program? Guys, it's been phenomenal. If you have investment dollars someplace, you have it in a IRA, you have it in a 401k, you have it in a mutual fund, you have it in an ETF, I would challenge you to look at our performances side by side, and that includes comparing the risk, right? Because the stock market, if you were to ask me what the risk is, it's 40%. Market crashes can do and have taken 40% out of your cash. So be aware of what the risk is if you're in a unmanaged approach, if you don't have that hedge fund aspect where you can short as well. Our performance has been amazing. Here's where we are at year to date. This is through the end of last month, okay? So this has all the way through September this year, 2021. Market had a great year, up 27%. We crushed the market, up 54.5%. Last year, 2022, of course, the market was a bear market. It lost money. It lost 19.85%. We crushed it even more percentage-wise last year. We made 22.4% last year. From a percentage standpoint, we did better last year than we did in the bull market of 2021. Year to date so far, we are up about almost 17%. The market's up a little under 12%. We are once again crushing the market. You say, it's not crushing the market. From a percentage standpoint, folks, we are crushing the market. And again, we're doing it at standard deviations that Cathie Wood should be embarrassed about. Just ridiculously low volatility. Okay. So if you are interested in a passive portfolio, long-term wealth creation, wealth building focus of passive investing, not trading, you can go to tryatmforfree.com. Again, we're looking for better returns in the stock market with less volatility. You can sign up there. You'll get a link from me. You and I can have a one-on-one Zoom session. I'll walk you through the asset allocation model, answer any questions that you have, and I think you're going to love it. You're absolutely going to love it. I do think that what we have here is potentially life-changing. I really do think that this is life-changing. I started this program just a little under 3 years ago with $25,000. That was what I started with. I'm at about $75,000 now. We're not even 3 years into the program. $70,000 at 30% a year. Again, there's never any guarantees in the market, but you know what our 3-year average is? Our 3-year average is 33% a year. ROI. That's what we've averaged. Is it a guarantee? Of course not. There is no such thing. But past performance can be indicative of future results. If you look at statistics and probabilities, that's what you got to base it off of, right? You look into the uncertain future, you don't know, but we know what's happened in the past. 70,000 at 30% a year over 10 years. Guys, that's $1 million. I'm taking this $25,000 account to $1 million. Is it going to happen overnight? Nope. No, it takes a while, but it's worth it. And it is a fabulous way to approach passive investing. So again, if you're interested in improving what you have going on right now with your IRA or your 401k or your mutual fund or your ETFs or your passive buy and hold, set it and forget it investing approach, you might want to check out this program. I think it's going to be a huge upgrade for you. So again, if you go to tryatmforfree.com, you can get access to our Discord server. You'll get access to all of our trades. You'll get access to the model portfolio. You'll get a link to me, set up a Zoom session. We'll go through and answer any questions that you have. Thanks, guys. Appreciate you. Have a good week trading.